You again today. Feel free to jump in the chat and say hello as you get settled in. Hi, Fanja. And good morning to all of our AI bots. Nice to see you all also. Welcome. Good morning. All right, ladies, we'll give it just one more minute for us to get a good quorum, and then we will go ahead and kick off. Hi, Maureen. Good morning, Natasha. Hi, Claudiana. Nice to see you. All right, ladies, let's go ahead and get started. The meeting is being recorded, and we just do a bit of introduction in the beginning anyway. So good morning and welcome back to the BIC Africa Acceleration Program for female entrepreneurs. We are super excited to have you here again today. I can't believe how quickly we are getting through this program. We welcome you back today for our fourth training session. And today we are joined by Agnes, who will give an introduction to herself in just a couple of minutes. But she is going to be your expert trainer for the next 2 weeks as we dig a lot deeper into this topic of finances. We touched on finances last week, more specifically around money mindset and how your beliefs about money can impact the decisions that you're making in your business and the way that you're showing up in your business. But today we're going to be digging much more into financial management for your business. Now, it is a meaty topic. It is a topic that may cause some of you to, panic a little bit or to want to run away and hide. But I promise you that Agnes will handhold you through this process and make it as simple for you as possible. So just be open-minded, be willing to learn, and even if it feels a little bit scary, then please let us know so that we can just support you as we go along. So we're not reviewing any homework today. We've already done that in the previous weeks. So I am just going to hand over straight to Agnes and say, welcome. Thank you for being here with us today. And let me stop sharing on my side so she can drive.
Thank you, Danielle, and hello, everyone. And thank you for stating that it is indeed a meaty subject, but shouldn't be a scary subject. So I'm Agnès, I'm French, as you can probably hear. I am a CFO, so Chief Financial Officer of my own company. I'm a co-founder of a company. I own a substantial share of that company, and that company operates in Africa. It operates in Madagascar, actually, so I could see that a couple of you are from Madagascar. Bless my heart. And I came to the subject of finance without knowing much of finance. And now I'm an expert in finance, obviously, but for me, the important thing is to make sure that you understand what it means and why it's important to you. So if you have any if I'm going too fast, or if you have questions, or if you have doubts, you please put them in the chat box. I think somehow, I hope I can see it. Let me see, because I can see your faces, but maybe not the chat box.
If not, I can always monitor for you and just interrupt and let you know if there's questions.
Okay, perfect. Because the idea is to really make it interactive and to really make sure that you get something out of it, and you get the key concepts. So you may not go out of the session today, with a full understanding of everything that we've covered. Obviously not. But the idea for me is to give you the tools to get back to it, and to also equip all of you with the key elements about finances, and then you can manage. So beyond being today a chief financial officer of my own company, I'm also working as strategic advisor. I'm a coach. I've lived in Africa 10 years in my life, so 2010 to 2015 to 2020 in Madagascar, in South Africa, in Lesotho. And then before that, I worked in big financial companies and blah, blah, blah. But that's not very important. So let me see. Okay, perfect. So today, we will cover financial management and financial management tools. Why? Because it's important you understand the concepts and the basics, but then the concepts by themselves are pointless. So the idea is really for you to have practical elements that you can use in your everyday work tomorrow morning. The objectives of the session for me and for you are for you to understand basic financial management, to be able to monitor your finances, and to be able to adopt, to see why it's important to adopt simple and good financial habits through simple tools. So before diving in, what is your reaction when you hear financial management? Is it something that you're really excited about, or is it something that the attitude would be more like this, or maybe this? What do you know? So if you want to start maybe using the chat, please do. I will ask you to interact with me today quite a bit, because I think it's important. It's a dialogue. So do you feel that you have some knowledge about it, or do you feel like, no, not so much? If some of you can use the chat box, please do so.
Are you seeing the chat, Agnes?
I actually do. Yeah.
Okay, perfect.
The elephant in my room. Okay, wonderful. Okay, so as I could probably, that was my obviously my and that was, I think, our hypothesis, that assumption that it is a difficult subject, and so let's try to make it better. So also, if you want to tell me if some of you are specific about things that they want to learn, please put that in the chat box, and we'll try to make sure that we answer those questions. But for those of you who are just scared about financial management, let's get in. And at the end of the session, I hope you'll be like this lady dancing. So the key questions we'll try to answer today, and sorry about putting so many slides about the objectives, about the questions, but I think what's really important about finance is that it's not a subject in itself. Finance is about what it means to you and what you use it for. And so that's why, for me, the questions are very important. And that's why you should keep them, because you can get back to it and say, okay, this is what we meant. This is what it's used for. So finance, you can sort of classify it in different sort of subjects. So one of the key subjects, obviously, is revenues. Revenues is how much money you're making. We'll see today that this is a limiting question. How much money you're making is not telling you how successful your business is. So the second question is, how much money am I really earning? And am I making a profit or a loss? Because at the end of the day, how much money your business generates is not what's important. What's important is what's left at the end. That takes us to the second subject, the expenses, what it costs you to run your business. So what are my costs? Am I sure that I'm considering all of them? I'm not forgetting some of them. Are the costs directly linked to the product that I'm selling or not? And what is the difference between operating expenses and capital expenses? So it's a lot of concepts. We'll try to be very simple about them so that you walk away with ideas of what it means to you and how what you should consider. The second, the two other subjects, key subject is cash. I'll tell you one sentence that I'll repeat: cash is king. Cash is king. Why? Because if you don't have cash, you actually close your business straight away. So you might be making money, but you might run out of cash. So what is the difference between income and cash? We will cover that. Maybe this is the most important subject of the day, the difference between income and cash. And if you walk out of this session with that understanding, it is already an achievement. Second question about cash: do I have enough cash to cover my business needs? And then again, talking about the cost, but in a different perspective, in the perspective of pricing. So how to set your price, the price of your products or services, and what you should be doing about it. Expected outcomes: you understand the key financial concepts. So revenues, profit, cash, costs, and CapEx. You can apply those concepts to your business, so you understand what those concepts mean practically for you. You can calculate your profit. You can understand what your cash position is. And what I mean by cash position is that do you have cash or not? And how much cash do you have? And then you understand how to set your selling price. And then obviously throughout the session, I'll give you a few simple tools that I invite you to keep with you and fill in every day. So the agenda of the day, sorry. Key financial concepts, financial management, embedded with the tools. Again, I intend it to be a very interactive session. So please, put things in the chat box if you need. Stop me. Really what we do is for you. It shouldn't be theoretical. You should understand what it means for you. So if you have any question, even specific about your business, we're here to talk about it. So the key financial concept. Now for you, who is currently making money in their business? When I say making money, are you making money? Good, Maureen. I'm happy. Okay. Funds think so. Okay. Okay. So you're all making money. Great. Do you really know what it means to make money? And do you understand why it's important to sort out your finances? This is what we're going to see now. So the first concept is the concept of revenues. So the revenues is the money you are generating when you sell your products or services. So it's your turnover. That's what revenues, turnover, same word for the same, two words for the same thing. It's how much money you're making. It's how much money your business makes. You sell 100 products and you're selling them for 100 francs. Okay, this is 100 times 100. This is how much money you're making. So you're making 10,000 francs, right? This is the turnover. But wait, the problem is that revenues are not cash. So this is the first element I really want to stress. Revenues are not cash. Why? Because some clients may be paying you late or not at the time you're providing the service. Let's imagine you are a company that delivers food. Maybe your client pays you every week, Or maybe sometimes your client doesn't have cash or doesn't have money. And so revenues is not cash. Also, revenues is not profit. So we will dig into that. I'm sure you understand the difference. And sorry about, maybe stating the basics, but I'm going to do it anyways. So revenues, and then to generate those revenues, you have to pay a lot of things. So the expenses is all the costs you pay to run your business. Your expenses obviously reduce your profit, and you have to track them. So what does it mean? Sorry, I'm reading at the same time the chat box to ensure that I'm not missing anyone. So okay, we'll dive into some concepts. So in terms of expenses, can some of you now put in the chat box what you think your expenses are? Some of your expenses. You can just put one word. We'll try to list what expenses are, and what can some expenses be. Cost of production, okay? Employee salary. All the raw materials, the renting of the house. Salary and bills. So electricity, communication, marketing fees. Okay, maybe some logistics. I don't know. Maybe some of you need to move your or to move yourself to provide your services. Exactly, logistics. Okay. Salary, good. Stock, good. So you have different types of expenses. There are expenses that are linked to the thing you're making. Let's imagine you are selling, and I'll use this example later. Let's imagine you're selling some fruit juices in the market. Okay, your direct expenses, so your cost, what we call cost of production, is what is going directly into the product you're selling. So it might be the fruits, it might be sugar if you're going to add some sugar, it might be water if you're going to add some water, and it might be the salary of the people who are directly contributing into producing those juices. It will also be the bottles, and that will be the cost of production. So that's what we call direct costs. Why? Because if the product disappears, those costs disappear. And on the other side, if you don't have this cost, you cannot do anything. And then you have all the other costs. The costs like rent, like the salary, maybe if you are a slightly bigger company, you might have someone to help you with admin or finances. This is an indirect cost. So you have a lot of different expenses. As you look at all your expenses, you have to really consider everything out there to make sure that you're not forgetting anything. Telephone bills, maybe the mobile money fees or the bank fees, maybe if you're going to use an accountant, the accountant, all of that are expenses that you need to pay to run your business. And it's very, very, very important to make sure that you're including all of them, because it will determine if you're actually really making money or not. Expenses are different from expenditures. So it's another quite important concept in finance. You have some expenses that are there and are transient somehow by nature. And you have some of them who are sort of more steady and I'll explain to you why I'm trying to use pictures. So like expenditures would be like a building, when expenses would be like everything that happens in the building. So basically, expenses are there every day on and off. Expenditures is things that are going to last over a longer term period. For example, let's go back to the juice business. Expenses, as I said, is the cost of fruits, the cost of people who are doing the fruits, the rent, if you're going to rent the booth, the truck that is the car that is going to take the bike that is going to take the fruits to you, all those elements. Expenditures, okay, maybe you're going to buy, instead of having someone crush them with their hands, maybe you're going to buy a blender. That would be an expenditure. Because this is something you're going to use now, tomorrow, in a month's time, hopefully in a year's time. So it's going to be there for you over the long-term period. It's something that helps you, generate your business, generate your money. It's something that's there to last. This is what we call an asset. It's an asset, something that lasts. And expenses and expenditures are treated differently in finances. I will not go into the detail of that, but an expenditures is not something that harms your profit like an expense. Why? Because obviously when you're going to buy your blender, you're going to give a lot of money for that. So short term, it's going to take some cash. But it's an asset. It's something that you're going to use for years and years and years. So it's something that helps you in the production of your business. Hence, it is not an expense. Expenditures is what we call, it's what we call CapEx. We'll call it CapEx. Expenses, we'll call it OpEx. So it's really the difference between operating and building in a way. So just for you today, I want you to remember that thing. Okay, some elements I'm going to pay are expenses. I'm going to pay them over the course of my business. It's there. It's used every day, every month to operate my business. This is harming my profitability. This is something I really need to take. Okay, I'm making my money, but this goes out. And then what's at the end? Expenditures. You're going to pay money for it, but it's an asset. It is something that you keep. So it's really something that helps you long term. So the treatment is very, very different. We'll get back to it. If you want to stop me for me to explain or to stop on some notions, you please put it in the chat. Again, the idea today is that we're trying to establish key elements that are useful to you. So please, you stop me. I'm there for you. So this is exactly what I explained. Some elements might be, income statement, depreciation. Okay, this is maybe the next step. But again, what I want you to remember is that expenses is regular costs when expenditures are investment. So it's a cost because it's money out, but it's one-off. It's something that you can build upon. Concept number 3, profit or loss. So basically how you're going to assess the success of your business is from taking your revenues and then taking out all your expenses, all of them, from those revenues. At the end, when you've done that, there is something left, or there is a gap. If there's a gap, if you have paid more expenses than you have generated revenues, unfortunately, you're not successful, you're making a loss. On the contrary, which I hope is the case for all of your businesses, obviously, if you generate revenues and after you've taken all the expenses out of those revenues, you still have some money left, you are making a profit, you are profitable. So the first, let's take a short stop here. Who in the chat box knows, can be totally positive about the fact that they're making money, meaning that they're profitable? Is it clear for all of you or some of you if you are making a profit for sure? Good ones, happy. We'll work on the not enough. What about you other ladies? Just starting to, okay, not really. Okay, another question for you. Do you track your expenses very in a very accurate manner? Okay. Okay, so that's good. I think some of you seem to have really good habits. Okay, Markel, maybe we need to do that. So maybe, I mean, the good thing, okay, because some of you are seem to be really diligent about costs. You know, maybe it's also things that you can discuss between you. And I know this is something that Danielle is really supporting, and Christina is really supporting the peer-to-peer element. So the value of what of this group is also to provide support to each other. And so, I mean, those of you ladies who have good practices, I really invite you to share those practices with your peers in this group, because this is really like this that people are progressing. And also when you have questions, you know, like some question, I don't know, I've decided to make my booth a little better. I've bought a plant, I've bought flowers. Is that a cost? Can I put it in my business, or is that a personal cost? You know, could be questions like that. So please do ask questions. Any question, I mean, between you as well, any question is valid, and it's really like this that we deconstruct the sort of scary notion about money. And we shouldn't be scared about money. You're actually making, you've built businesses to make money, and so, you know, hopefully this is what we help you doing. So okay, spreadsheets to monitor monthly costs. This is great. Spreadsheets are great. I mean, Excel is amazing. And okay, funds, you're employing an accountant. Okay, perfect. So let's move in. So again, if there's money left, it's a profit. If there's no money left, it's a cost. And obviously your business needs to be profitable. It's obvious, but let's take the obvious. If your business is not profitable, if you're not making a profit, your business is going to go bust. You're going to be bankrupt. Now, making a profit. Okay, I'm making profit, but failing to manage my finances. So we'll hopefully, Antifile will hopefully give you some tools to help you do that. And if and I think funds, I mean, I want to use what you're doing as also an example. If managing your finances is too scary for you, for some reason, because it's not your thing, because you don't like numbers, because it's too many tools, and you're not into Excel spreadsheets and tools, you're into doing actually your business, it's fine, but equip yourself with someone who knows, meaning that, you know, go ask an accountant for 3 hours per week, because this is something you need to have. You do need to have sound financial management to survive. And so if you're repelled by it, it's okay. But then, go find someone to help you. So just on this profitability notion, so midterm, long term, your business needs to be profitable, otherwise it's going to go bust. Now, it doesn't mean that every month you need to be profitable. Hopefully you will be, but maybe you will have difficult times. Maybe, I don't know, if you're producing your juices and next month there's a problem with oranges, and you're used to providing orange juices, and they double in price because there was, I don't know, a volcano or a hurricane. Okay, you're going to make a loss next month. It's okay, because you've learned your lesson, you've decided to use a different source for oranges, or to stop oranges and postpone apples juices. So it's okay. It doesn't mean that every month it's the end of the world, but on and off, long term, you do need to be profitable. Also, okay, I hope we are moving. I hope we'll have the opportunity to dig a little bit into this constructing also the costs. I'll do it at the end, but also giving you some notions of where you need to be particularly careful about. Okay, because I've said that, I'll start. Okay, just in terms of profitability, a really key element. What I spoke about earlier about direct costs, the cost of your oranges, the cost of the people who are pressing the oranges, the cost of the bottle. So what I called direct costs, it is what we call cost of goods sold. So it's literally what goes into your product, but or service in a very practical manner. Service, I mean, if you're going to have, I don't know, a massage company, the direct costs would be the oil that you're putting on people, and the salary of the people who are actually, massaging the clients. So it goes for products, it goes for services. That doesn't matter. But your direct cost, what we call the cost of goods sold, need to be positive. They need to be, you need to make a profit out of it. You really always need to be positive when you take out the cost. If you are selling a service or product and your direct costs are more than the service or product, this is very dangerous, because it means that each time you're going to sell one juice or you're going to do one massage, you are losing money every time. And so you should stop straight away. So I'm just putting that here. I'll get back to it, but I think it's good, to just hear things many times. Cost of goods sold, direct costs, they always need to be less than the revenues. Okay, so you always need to have money left after you deduct direct costs. Very, very, very important. So now let's move to concept 4, another very, very, very important notion: cash. So I guess you all understand why cash is important. We all do. But okay, let's state the obvious again. Cash is the physical money your business has on their hands at a certain point in time. So it's what you can literally physically spend now. There are several sources of cash. So it can be literal cash, bills, not banks, but it's also what you have in your bank accounts. And it's also what you have in your mobile money accounts. And it's also what you have in your safe. So it's the money that is available for you to run your business. So what we call cash is actually a little more than physical cash. It's everything that you can tap into to pay someone tomorrow morning? Okay, hang on. Cash is different from revenues. So I gave an example here, delay between sale and cashing in. So I gave this example of, and I can't remember the example, but let's imagine that you, okay, again, you're running a massage company, and then some clients decide to pay you. Maybe you have a hotel as a client, and the hotel won't pay you each time some of their clients come to you, but they might pay you at the end of the month, which means that you need to have enough money to, which means that what you're going to have in your bank is different from your revenues, because once you have provided the massage, you can consider that as a revenue. So if you've sold your massage, I don't know, $20, even though the client has not given you $20 yet, you have booked your revenue. So in terms of revenues, the $20 are in your book. But maybe you'll get the $20 at the end of the week or at the end of the month. And tracking that is extremely important. So this delay between sale and cashing in is different. Conversely, you might have some specific contracts or deals with people who are providing things to you. For instance, for your massage company, you're going to use a lot of oil, and because the provider of oil knows you well, they don't ask you to pay every time every time they deliver things to you. They are okay with you. They're okay with you providing paying the oil at the end of a month. So basically, you're going to have oil that you have not paid for, but you have it in your company to do your massages, so it's a cost, but the cash hasn't gone out yet. So those delays are very, very, very important to track, because they really can decide the survival of your company or not. So cash is different from revenues. Are we all okay with that? Do you understand what I'm saying when I say cash is different from revenues? Or if some people don't get it, want more about it, please put it in the chat, because this is very important. So I want at the end of the slide, everybody to really understand why cash is different from revenue. So if you are not sure, please put it in the chat box and we can discuss again about it. Another example I'll give you is what I called CapEx. So you remember CapEx is expenditures, is what I called investment, or what I called asset. It's all the same thing. So CapEx, investment, asset, same idea. When you're going to buy your blender, you're going to pay for the blender. So cash is going to get out. Now, a lot of cash. Now, again, this is an investment. So it's not going to harm your revenues. All the contrary, it's going to help you be more efficient about mixing juice. And so it's going to help you generate more money. If you run a massage company, it could be massage tables. Like if you're going to massage people on the bed, it's not the same experience as a massage table. And so your massage tables are CapEx. There are a lot of money out, but they're going to help you generate revenues over time. So I assume, because there's nothing in the chat box, I assume it's fine for everyone. I hope so. And again, if you need more explanation about it, it is really, really, really super important. If you walk out with one notion, might be this one. Cash is different from revenues, and you understand why, and you understand why you have to track your cash. Most important thing of the day. So, and cash is different, right? And cash is different from profit. And I explain why. So, and the CapEx is a good example. You know, you're going to, okay, this investment is going to really harm what's left in your pocket at the end of the month, but it's an investment over time. And so what you're going to have left, actually, if you think that it's your profit, it's wrong, because your profit is more than the cash you have in your hand in that case. Managing cash is crucial, and there we go. And okay, you remember at the beginning of the session I said cash is king, and this is the representation. Cash is king. Please remember that cash is king. Example question. So at this stage of the presentation, do you have any question you want to put in the chat box to discuss? Do you want to share examples maybe? Or again, if you're not sure about something, please put it in and I'm happy to reply to it or to discuss it with the rest of the group. So, okay, I'll give you 20 seconds to think about it.
I can see that Fanja Miora is raising her hand. So Fanja, maybe if you could just unmute yourself and speak up, if that's okay. Or just write in the chat if you prefer.
Yeah, I prefer speaking because it's hard for me to, to write my question. My question is there a way when we are making investment, I mean, example, buying machine, we are using a lot of cash. You said it is an investment, but somehow it is money that we take and used. So how to get back that money again? I mean, is there a way to integrate it within the price of the product we are selling, so we can get back that money used for expense for buying machine?
Okay, excellent question, and thank you for that. You are making an investment to help you be more efficient, probably about your business, or to help you be more qualitative, maybe about your business. If you're going to be more qualitative, so through your investment, you're going to offer something better than before, the odds are you can increase the price a little bit, and we'll go back to it. We'll go back to see how, you know, how you can determine your selling price, because obviously selling price is also about the rest of the world. But hopefully you can reflect it a little bit in the selling price. Nevertheless, even if you don't, the idea is that the investment helps you do your work, or helps your business be more efficient. Otherwise, you shouldn't be doing it. So if you're doing an investment, normally you will be able to sell more, which means that your investment helps you practically make more money. So I know that notionally it's difficult to really reconcile those elements, because when you're making an investment, it's money out, but this money out is going to help you next month, the month after, and so on, to make a little bit more money each time. And that's why we call it an investment. And I saw all the questions in the chat box. I'll get back to all of them. And so it's harmful in the short term. It's harmful in terms of cash, but in terms of revenue, it's going to help you generate more money. So to be more profitable in the future, because it is something that is going to help you for some years, there is a specific way to put it in your financials, so in your financial statements. So basically, you're not going, when you buy, so let's take the example of a car. I don't know, I'm selling whatever, I'm selling, I don't know, food, and I've decided to buy a car so that I can go to my clients. The year I'm going to buy a car is going to be a very difficult year because obviously a car is very expensive. But the car will really help me have 10 more clients per day. So I'm going to make more money. But obviously, it's going to take me maybe a year before, maybe 2 years before that little bit of more money each month pays for the car. And there's a way finance is going to help you reflect that and help you see that in your financials. So basically, when you're going to make the revenues, you're not going to take the cost of the car. I mean, you're not going to take the expense of the car as a cost. The car won't appear in revenues, cost, profit. The car is not there. The cost of the car is a little bit there every month and every year for so many years. So usually a car, I think it's in 8 years. It's what we call depreciation. And it's the same for a telephone. It's the same for a laptop. It's the same again for a blender. It's the same for massage tables. There's what we call the depreciation. So basically depreciation means what is, okay, a car is supposed to last for how many years? Maybe 5 years. So that is going to be considered the depreciation period. And it means that you're going to take the cost of the car, you're going to split it into 5 years, and you're going to put 1/5 every year. So this is really reflecting how much money the car costs to you. And then you're going to see if, yes, it helped you generate more money and it's profitable. So I don't know if that answers your question, Fons. But in a nutshell again, yes, an investment is a one-off cost that is going to use some cash from you, and maybe you're going to actually be negative the year you buy the car. So maybe you're going to lose, I mean, to not have any cash in your hand the year you're going to buy the car. But actually, the cost of the car itself should be split into several years. And if you do that, maybe you're actually making money this year. And maybe because you bought the car, you're going to make more money the year that are coming, and so your profit is going to be bigger. This is really the idea of the investment. It's cash out, but it's cash out to help you be more successful and generate more profit in the future. So let me go back to some of the question. So Florence, I hope that was more what we just said helped you more. I mean, help you understand better. Otherwise, again, we can get back to it. So how do I manage my payment terms without affecting my relationship with my customers? Very good question, Maureen. Again, let's tackle this question now. Actually, you should manage your payment terms with not only your customers but also your suppliers, and you just need to try. So managing payment terms is explaining people why it's important for you to be paid more regularly, maybe, or to not give them a month to give you the money, but to give them a week. Obviously, the idea is not to get in a fight with the customers, but if you don't try, you don't get. So it's just a question of explaining why for you it's difficult to go by with those payment terms and to propose a new way moving forward, so that it's easier for you to operate. I think what's really also important is to understand that talking about money is not shouldn't be something that is annoying to you. You are setting a business to make money. You want to set a business to make money, to make a living and to pay for your families, maybe for your kids' education, for your parents who are getting old, who knows. So it's not like you're not working for free. You are working because you want to help yourself and other people, and you shouldn't be ashamed about it. So money is great because it's what's going to help you do just that. And frankly enough, if you're not making money, you might as well go back in a company and work for someone else and have your cash every month. But okay, you decided to be courageous and do something else because you want to, you want maybe more and you want to help more people. Don't be ashamed about it. So in your, also in your, you should be, you shouldn't feel that talking about money with your customers, the suppliers, other people, your colleagues, your competitors is something that you shouldn't do. You should actually do it. Money is fine. Money is just it's just paper. It's just something that helps you have a better life. And so just be, just try. Just try. And if they say no, okay, fine. But try to convey why you need more, and maybe that'll tell you, okay, we totally understand, Maureen, why you need your payments every week. But the problem is that our own clients only pay us every 2 months, and so we cannot do that because we don't have cash to give to you. But what we can do is maybe every 2 weeks, and and maybe you move from something every month to 2 weeks. Just try it. And don't be scared. Really do not be scared, and do not think it's a problem to talk about money. And the worst case scenario, they say, well, no, we cannot offer better conditions. Okay, at least you've tried. So CapEx, yes, CapEx is like assets in balance sheet. It is assets in balance sheet, totally. So CapEx investment goes in assets in balance sheet. Maybe we don't go into that now. Maybe we can talk about the different financials at the end of the session, because I think some of you, maybe it's too much. But yes, CapEx is assets. So assets, what you need to just have as a notion, okay, balance sheet is what? Is something that people ask. Some people out there ask you when they talk about financial statements, they ask you for balance sheet. Balance sheet is a picture of your company at a certain point in time. So it doesn't look at, if your business is, going good, not, it's just a picture. So it's just, they're coming in your house, making a picture. It's really the idea of a balance sheet. And the idea of balance sheet is just to say, okay, this person, just to give you again an example, so to give you an image. So if they were coming, if your business was your house, balance sheet would be a picture of your living room and say, okay, this TV, this couch, and this armchair are assets. Now we see we're missing chairs and a table because we don't know. So this is debt in a way, or this is something that so balance sheet is really about what you have, assets, and what you owe to people. So this is practically debt. So it's really what you have, what you owe. And balance sheet is that. So CapEx investment is something you have, is an asset, because this is something that helps you in your business over time. How can we classify an investment we receive? So I understand, like funding. Yes, this is cash. So again, we go back in the balance sheet. So it will be reflected as cash on the asset part of the balance sheet, but it's also a debt. So it can be short-term debt. On the other side, it will be short-term debt, long-term debt, depends on the type of funding it is. And this is our next session. So I won't dive into that, but because it's giving you you're receiving cash, but in return people expect things, and if it's funding they expect you to pay them back. It's a debt, so it's a debt somewhere, and in exchange for this debt you have some cash today. What are the basics we need to know if we already have a team working in finance? You need to know if they're doing it right and if you're making money. So even if you have a team in finance, you need to understand the concepts and all this flow, because you don't need to understand obviously details, but you need to question the detail. So that people just don't tell you what they want to tell you, and you're not mistaken about whether you're profitable or not. Very practically, you need to be able to know if you're making money, and you need to be able to know if people are cheating you. And sorry to be that blunt, but finance is also about control, and you need to have the tools to control your finances, because otherwise you might have like people stealing from you. So that is the thing. What is the thing? The funds, the stealing or the control? But so the key notions in finance, again: cash, profitability, and then you need to be able to control. So there are two elements. Profitability is about if your business should make money at the end of the day. So you will have your cost structure, and we'll get back to it. So practically you have to list all the costs you might have, and you have to know how much it is, more or less. The rent should be always the same. The salary of the people should be always the same. The money you're going to give to tax should be always the same. The gas you're going to put in the car should be always more or less the case. But this is exactly the type of places where cash, where some people could actually cheat, and so you should be particularly careful about those elements where it's not so set. It's difficult to know exactly what's really going into really the business. But you need to have the cost structure. You need to have control about what's coming in. So you need to have a way to make sure that when you're selling a product, it is recorded and it's not going in the pocket of the person who sold the product for you. So if you're not selling directly the product, you need to have a system in place to make sure that you really grasp all the revenues you're making. So basically that the person who sells for you is not selling products on the side and putting money in her pocket. Very important. So that could be a till, that could be like any control system you might have, but you need to have a system in place. And then, because you're going to know your cost structure every month, you're going to track this cost structure. And if something looks odd, you can question. You can be like, okay, well, why is this expense so high this month? And then also, because you have the structure, you know how much money you should have at the end of the day. Because you're going to have monitored the cash, and I'll show you that to you, you should know how much cash you have any point in time. If you see that what's in the books, what's there in the journal is not what you really have on your bank accounts or in the safe, okay, you really need to react instantly. I don't like that part of the job either. I hate it. We all need, but we need to control. And what's really important is to put systems in place to control and to react. And so if you're going to control and react, over time, people are going to know that they cannot really cheat you, and they're likely going to be, careful about it. But that's also why maybe you have an accountant to help you see that. Okay, any more question here? I'll assume not. So business case. Let's go really quickly in that because I want to have some time for the rest. So the juicy case. Told you I was going to talk to you about Hawa. Hawa sells fruit juice in the market. She buys oranges, mangoes, and plastic bottles. She uses her mobile money account to receive payments from clients and sometimes buys stock on credit. Last week, she sold 80 bottles at 500 francs each. She spent 15,000 francs on fruits, 100 francs per bottle, and 3,000 francs on transport. The transport is run by her cousin, and she didn't pay her yet. So question, this is the questions I would love for us to answer. I mean, for you to answer. So what is hours revenue? So please take your calculator if you want. What is hours revenue? Okay, so the revenues are going to be, so last week she sold 80 bottles at 500 francs each bottle. So the revenue she made last week is going to be 500 plus 500 plus 500, 80 times exactly. So for 40,000 exact. Thank you, Maureen and Franz and Sam. So she's going to be making 40,000 francs. Now, what are the expenses? So she spent 15,000 on fruits, 100 francs per bottle, and 3,000 on transport. So the 100 francs are per bottle. So we need to consider that it's 100 francs times 80 because we have 80 bottles that were sold. So the costs, the expenses are going to be 15,000 plus 3,000 plus 100 times 80, which is exactly 8,000. And so that's going to be 26,000. So is she making a profit? Is she profitable in the business? Yes or no? Yes. And she's making she's quite profitable. She's making a good business. Now, obviously, did she forget something or not? Did she consider all the expenses? What do you think? You know, for me, okay, she has benches and she has a stall in the market. So maybe she forgot to consider the rent of the stall. Exactly. So no, she didn't consider everything. What else did she forget to consider? Very important. And we'll get back to it again because it's very important. Another thing she forgot to consider is salary. Thank you, Franz, and including her own salary. So assuming that Awa is the person we're seeing on the picture, she really needs to. So transportation, Elisa, is the 3,000 that's all there. But salary, so we get like that. Awa needs to consider her own time and to consider all her own salary into the business. It is very important because otherwise it could look like she's making money, but she's not really making money. We'll get back to it, and we'll get back to that next session as well. So 40,000 minus 26, she's profitable. And does she have cash on hand? Yes, she has cash on hand because also she didn't pay her cousin. So effectively, she has 40,000 minus, so she has 14 plus 3,000, 17,000 on her as cash now. Now, she rents a stall at 5,000 francs per week, and she needs to pay for the month in advance. So she needs to pay out 20,000 today. So now, is the business profitable? So again, we are looking at how much she spends every week. Every week she spends, she made 80 bottles, she made 40,000, she spent 20,000, 26,000. She's profitable. Now she forgot the rent. Whoops. And the rent is 5,000 per week, but she needs to pay for the month in advance. So is she still profitable? Well, actually, she is still profitable. Why? Because the expenses were 26. She forgot the rent. The rent is 5,000 per week. So it's important you look at the same cycle in time. So 5,000 per week added to 26 is 31,000 in expenses. So she makes 40,000 and the costs are 31,000. So she's still making a profit of 9,000, which again is not too bad. Now, can she pay the full rent? Can she pay the 20,000 she's being asked, because she's being asked to pay for the whole month? And no, she cannot do that because she doesn't have enough to pay 20,000. So this is an example of where the business is still profitable. She has, after applying the rent, she has 9,000 francs in cash, but because she needs, because she's being asked for 20,000, she cannot pay that expense. She doesn't have enough cash on her hand. So she's profitable, but she cannot pay the rent. She's short on cash. What should she do, according to you? What would you advise Awa in this situation to do? Make more sales, yeah. Maybe she can ask people to drink more juice, yeah. But okay, let's say this is fixed. She cannot, that's it. So do you think she should continue with her business, or she should stop? She can look for a cheaper rent. She can negotiate the payment of the rent. Exactly. So yes, she should try to make more sales. She should try to find maybe a cheaper rent. But today, more practically, what should she do? She should negotiate the payment of the rent. Why? Because she does make money. The business is profitable. And it's actually quite a profitable business. 9,000 out of 40,000 is good. It's more than 20%. It's good. It's a good profit. But she needs to make sure that the cash, what we call the cash flow, so the in and out of cash, allows, she can support the in and out of cash. And so she should go to the renter, to the owner of the store and say, okay, I can pay every 2 weeks. I cannot pay every month. So let's move to every 2 weeks. Are you fine with it or not? So negotiate payment of of the payment terms. Are we good with it? So I consider we're good with that. Again, if you want to chat to post things in the chat, please do. So revenue is what I'm going back to just again, being sorry to be using the hammer, but I think this is the best way for finance. It's just hearing over and over and over again. This is how it becomes really it becomes familiar. So the revenue is what I'm selling, and how much money am I? I'm earning. So this is the questions that I want you to walk out with. After this session, you can go back to those questions and ask those questions for yourself. So what am I selling? And how much money am I earning? Expenses, what am I regularly spending on? Profitability, am I making a profit or a loss? And cash flow, when does money enter and leave my business? This is really key questions for you in finance. When you're not sure, go back to those questions. Go back to those 4 simple questions. So now we will dive into financial management, and we will mix principles and tools. So here, there's nothing new. You have all the concepts. We have seen the most important concepts in the last hour. Sorry, I'm going to do a little bit. So now it's just about what to do with this concept practically for your business and providing with tools that can help you with that. So managing cash flow. We said it, no cash, no business. Awa, if she's going to want to pay the rent of 20,000, she will not be able to do it. And so if the person is really stubborn in front of her, she will have to stop operating. She will have to leave the store and be out of business. So managing cash flow is the #1 priority, because it's what ensures that you're still doing your business, providing your business tomorrow morning. So no cash, no business. You might be making potentially huge revenues. If you don't have cash, your business is gone. So cash flow is about managing the movements of money in and money out every day. Okay, I won't say it again, but okay, it's because, again, cash maintains you into business, and also by managing your cash, you'll make sure that you can pay the people you need to pay to run your business. So the basic rules: always know how much cash you have. Track all the payments in and out. It's true that in the example I didn't count the salary of Awa. We should consider that she might want to put 5,000 for her salary to make sure that she accounts for her own efforts into the business. So that should be part of the cost she really considers. And thank you, Christina. So track all the payments in and out, even small ones. So all the payments, and try to plan ahead. So hopefully this cash management should allow you to know who you can pay and when you can pay them. And so also to manage this flow. So some people you will not be able to negotiate with, and some people who you will be able to negotiate with. For instance, if your cousin, if I go back to the example, if the cousin is providing transportation, maybe doesn't need money tomorrow morning, and maybe you can delay that payment a little more. So it allows for you to manage the cash you have. Always think about it. Cash is about short term, is about short-term. So one question for all of you ladies. Do you know today, Tuesday, 24th of June, do you know how much cash you have in your books or you had in your books yesterday evening? Good. But if you don't know, it's fine. I mean, it's fine. It's not fine, but we'll give you tools so that you know. So it seems most of you actually really track the cash management. So, I mean, what about people who don't say yes? Okay, so everybody knows. Great. Do you know, do you think you have a good visibility over who you will have to pay this week? Okay, so it's good. Wonderful. So if you don't dare to say no in the cash in the cash, sorry, in the chat box, it's fine. I understand, and it's fine. Hopefully, we'll give you some tools to put that in place now. So the tips: monitor daily cash, and not every sale and every expense. Keep a cash reserve. So always try to keep some small funds in case of emergency. Try to anticipate difficult moments. So try to anticipate what we call a cash crunch. And maybe try to, I mean, you need to really play around with that pot of cash you have and to see when you're going to buy things. So when you're going to buy your fruits, or you're going to need to buy your fruits every 3 days so that they're fresh enough. So what it means for your rent, etc. You really need to be planning your expenses and to have a really good control over what you need to plan for. I know all of you know your businesses, you know, more than anybody else, but maybe sometimes you've been surprised in the past. Maybe you had, and probably you had to pay for things you didn't think about. I think it happens to all of us. And the idea is to really, make sure that doesn't happen, or that you do have everything in your sort of horizon. You sort of consider everything, and collect payment quickly. As much as possible, clients should pay you when they use your services. So this is the tool that you will have in the workbook, editable, so you can use it. The idea is very practically, in a very simple manner, to help you track those cash movements. So maybe, I mean, everybody has this kind of elements or not? Or, I mean, yes, at the end of the day, if you do track your finances, I mean, that's fine. But if you don't, please put it in the chat, because I really want to explain how to use them. If you already have your own tools to track your cash in and out and your sales and expenses tracking journal, it's fine. You don't need to I mean, please do not use mine. I mean, you use those ones. Keep yours. What's working is working, and this is what's really important in finance. What's working is working. You don't put the revolution where it doesn't need to be. But if you don't have tools, this is what I'm I'm proposing as elements to help you. So the first element is the cash book framework. So basically, you see, each time you will have, it's very self-explanatory, but okay. two, proposition, the date, what you sold or what you cashed out, and so the money in or the money out, so what you sold and made money. So again, the first one is very important. It's really about the cash. It's really about money in. It's not about revenue. It's about money in. So it's really practically what you're cashing in your pocket and what you're taking out on your bank account. So item sold, expense detail, how much cash you made. If you are going to, if it's an item you sold, you put the money in cash received. If it's an expense, okay, if it's your rent and you gave out your rent to your landlord, it's cash paid. So you're going to have a line for each element. So for each element, you have either cash received or either cash paid. You can't have both. And then you go to have the balance. The balance is the first line, so the line before plus or minus the line below. So if I'm going to have a 1 in the balance, a 1 in cash received, a 1 in cash received on the first line, the balance is going to be 1. And then if the second line is something I paid for, and it's going to be 2, then the balance will be 1 minus 2. It's going to be minus 1. Is that okay for everyone or not? Okay. I consider that the first one is okay for everyone. So the first one is really about the cash. Again, it's money that comes into your pocket, into your safe, into your bank account, into your mobile money, or it's money that comes out of your mobile money, bank account, blah, 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 blah. It's really literally transactions. It's tracking transactions, okay? I cannot put figure, unfortunately, Florence, because I have to go out of the presentation if I do that. But okay, I'll give you an example. Date, first line, date here. I don't know if you see the mouse. If I put okay today, item sold 2 bottles of orange juice, cash received. Let's say it's 20. It's the 20. It's $5. I'm gonna have $5 here. Okay. Second line. I need to pay for something. So expense details, bottles, cash paid is going to be $5. So the balance is going to be $20 minus $5. It's going to be 15 here. So you're going to have 20 here and 20 here. You're going to have minus 5 here, and then you're going to have 15 minus 5. You're going to have 15 here. And so on. So this journal never stops, okay? So you can track so you can make you can sort of make excerpts at the end of each month, but this is something that goes along forever. And that should reflect what you really have in your bank accounts, mobile money, all your cash. To get back to what you were saying about control funds, the position you would have in all your cash elements, so bank accounts, mobile money, extra, all together should always equal what you have in your balance. So if you're going to look at the journal, the cash book for Monday, 23rd of June, what you had last night, in the balance part, that should always reflect bank account plus mobile money plus. It should be the same. If it's not the same, it means there's a problem somewhere. So either people didn't record things properly. I mean, it means they didn't record things properly. So, some money has disappeared. Okay, so this is really for you the way to track and to control to control. Okay, the second element is a bit different. It's sales and expenses, so it's the same. I mean, you don't have, as you can see, you don't have here a balance, because the idea is not to have a balance. The idea is to track the revenues here. It's not about cash, it's about what's coming in, what's going out. So when I was saying about, when we were talking about the cousin of APfWE, the expense will be here. The total expense will be there, even though it's not been paid out. It's not been cashed out. So why are we keeping two tools, are you going to ask me? We're keeping two tools because the first one is, again, the cash position is what you have with you to use in terms of money. This is a pot you have. The second one is tracking your revenues and your expenses, so the money your business is generating. It's not about the cash, it's about what you've sold and what you've expensed, even though your clients didn't pay you yet, even though you didn't pay your cousin yet. Are we good with that? Do you get it or not? No, yes is I think it's probably a bad a bad sign. So do you okay, again, very important to keep track of both elements. It is not the same. I mean, if you think it's the same, it's okay. We can talk about it later. I can get back to it next week. Really, it's important you understand it's different, and the goal is different. The goal of the first the cash book framework is to make sure that you have money in your hands to do whatever you have to do, to pay your to pay whomever you have to pay. The second the journal is to make sure that you're recording what you're doing, and at the end of the day, that's what is going to tell you, to help you tell you if you are profitable or not. But the aim is really different. Okay, let's move to the cash flow again. So this is to track cash flow on and off every month. So the idea of the balance, so this here is something that never ends. As I said, the first table never ends. You continue over time, you continue, never stop. Every month you're going to want to know, or maybe some people will ask you to know, how you ended the month. So a good practice is to put that in place. So beginning cash, so practically the first element here, in the first box in January 25, would be what's here on the 1st of Jan, 8 o'clock in the morning, before you started doing anything. So this is what you're going to put here, okay? Then you're going to add all the inflows and the outflows of the month. So basically, you're going to add all the ins and all the outs of the months. So you're going to add this plus this plus this, and you're going to put here. And you're going to add this plus this plus this plus this, and you're going to put here. And so on the 31st of Jan, you will look, okay, what went out, what went in terms of cash. The ending cash, so the beginning plus the inflows minus the outflows is here. It's a formula, it's here, okay? That will be the same as what you have here on the 31st of January at midnight. So the idea is really to make sure that it ties. If it doesn't tie, there's a problem. You need to take care of it. You need to look why there's a problem, but it should tie. So the balance the balance at the beginning of the month, at the end of the month should really match what you have, in date of the 31st of Jan. Sorry. And so you're going to do that every month. So basically, I have 100 at the 1st Jan. I cashed in 50. I cashed out 25. And so at the end of the month, I'm going to have 125. 100 plus 100 plus 50, 150 minus 25, 125. So here it's going to be 125. And that number you put here, and you do the same, and you put here, and you do the same, and you track that over the life of your business. It's important because it's going to allow you to see cycles of inflows and outflows and funds to get back to your question of control. This is a good way to control if it's normal or not. If all of a sudden you have a lot of outflows, you might be like, whoa, hang on, what happened? Then you go back in the detail. It will also maybe allow you to see cycles. So maybe the oranges are more expensive in March, April, June than they are October, November, December. And so your outflows will be more in March, April, June than they are at the end of the year. And then as a business owner, you have two attitudes. You can say, okay, I know that I'm balancing over the outflows throughout the year, so fine. Or, hey, hang on, the oranges are really more expensive in March, April, June. I'm going to try to increase my price to reflect it. So it really can help you make sure that you have enough money to keep your business, and also start making decisions about, how to run your business. Priority number 2, safeguarding profitability. So I gave back, probably you remember, if you don't make money, you're making a loss. If you make a loss, you're going out of business. So your business needs to generate profit over time, obviously. And so you need to make sure that your sales cover all your expenses, all of them. If they don't, you need to react really, really quickly. And to see how that impacts your profitability levels. An increase in price, let's go back to the example. An increase in price in oranges could be something really short term because of climate every year, or because there was a problem with a certain climatic element. And so okay, it's going to be temporary, fine. You will still need to react, or to think about reacting or not. Now, maybe all of a sudden oranges become way more costly because I don't know, more people like more oranges, and then there's not enough oranges for all people, and so they become more expensive. There, you also need to decide what you're doing and really quickly assess if you're going to increase your prices or change changes. So really, it helps you, guide the car or the ship. Do not forget to include your salary. Get back to Christina's point. Why you should put your salary in, because again, you're running a business to make money. You're not running a business just for the sake of it. So you need to account for your salary. And also, if you're going to try and be supported, so if you're going to try and get funding, and again, it's next session, if people don't see your salary, that's a big problem. So you always need to consider that your time is valuable. It's a resource. That resource needs to be reflected in your cost structure. This is a question I asked you before, so I won't ask you to do it again. But it's really, the two questions you always need to ask yourself. Do I have enough cash? And am I running a profitable company? To help you decide or to help you assess if you're running a profitable company, I propose you this tool that I call pricing and cost structure. So the idea is to try and make sure that you are accounting for every expense out there. I classify the cost in two buckets, so the fixed costs and the variable costs. Variable costs is more or less what I called the cost of production or the cost of goods sold. So when I told you before, if your cost of goods sold, which is the cost of production, which is the direct costs, if they're not below, so if the revenues don't cover for these costs, you have to stop immediately. And I'm serious about it because you're losing money every day. So the variable cost, you can think for you, okay, variable cost is equal direct cost. So it's really the costs that are going directly into the product or service you are developing. So those variable costs can be the materials. So again, the oil if you're running a massage company, maybe the towels, maybe the swiping people, the salaries of people massage. If you're going to run hours business, it's going to be the fruits, the bottles. It's going to be her cousin who helps her, and it's going to be her salary. The labor costs are going to be her salary. Okay. The fixed costs, it's going to be the rent, the electricity, maybe the labor costs of other people, your accountant, funds, the bank services, etc., etc. So you need to obviously this is very restricted. Okay, this is only examples, right? So you need for you to take this table and expand it to create as many lines as needed to reflect your cost structure. And then you try to put the amount for obviously the same period of time. So you need to say, okay, I'm going to talk in years or in months, and you're going to put the amount in months for everything, okay? Be careful about that. Be careful about making sure you always use the same reference point because it's a convention and because it's used, I would use a month. I would look at expenses per month because this is the way, it's easiest for most people, but always use the same timeline. Is that clear? Or do you have questions about this table? Or do you want to ask me in the chat box about whether certain elements should be considered as costs or not as costs? Okay. Just to get back to the point that Franz made earlier, if you're going to make an investment, if you're going to buy a car, it is not here. The car is not there. What you're going to put there, if you bought a car, is you're going to put the gasoline and the maintenance costs that you're going to incur for using the car. So the cost will include gasoline, maintenance, repairs, but the car is not a cost. Okay with that? Okay. I hope it's okay. And last element, it's only 4 tools. Improving for that's actually 5. So two more tools. priority number 3, so financial management, priority number 1, managing cash, priority number 2, managing profitability. Priority number 1, trying to increase and to improve profitability. Why? Because improving profitability is more money in your pocket. As simple as that. But it doesn't mean that, so it means selling better. Selling better is not selling high. So why? Because it's about selling wise. What I mean is that your price must cover your costs and the margin you want to make. But obviously, you're not operating in a wonderful world where you're the only one providing your services. So this is something I think will be also covered in forthcoming sessions, but I want to position it here. Your price should be set as much as possible, and possible is determined by what? It's determined by the rest of the people. So if you're going to sell fruit juices, you obviously need to look at who is providing fruit juices in the market and how much they're selling it for. And you'll need to be more or less at the same level. Maybe you're going to have a slightly higher price because, I don't know, you're putting sprinkles on your fruit juice. But you'll need to be really paying attention to competition. And we also need to look at what your clients are willing to pay. So if you're going to sell your juice $5, well, you won't be selling them. So it's really important to think about your client, your competition. So how do you determine your cost? How do you determine your price? You come from the cost. I told you before, be careful, the COGS should always be covered. Your total cost should be covered. But what I mean that so you should consider how much you want out of each thing you're selling. If you're going to provide a massage for $10, or it's going to how much money you want to make, and then you need to add this desired profit to the cost. So if you say, okay, I want to have I want to make 20% of really margin in my business, which is really good, at the end of the day, you will need to say, okay, 20% is how much? If I sell my if I sell or if I have a cost structure of 10, so let's say, okay, you're going to you're the massage person, you know that your massage costs $10, pay the person, pay the oil, extra. You need to take all those costs, $10, and say, okay, this is what I have. I know it's full. I considered everything. A massage is $10. You included the price of the rent, you divided the price of the rent, and okay, the massage is $10. So if you want to have a 20% margin, this is going to be your cost times this margin. So basically 20% on $10. 20% on $10, you want to make $2 per massage. Okay, so it means you want your money in the pocket at the end of everything you had to consider. You want $2 left. So it means, because your cost is $10 and you want $2, it means you have to sell for $12. Okay. So again, if it's not, I mean, I think this is self-explanatory, but if it's not, let me know. I think we might run 5 minutes late, and sorry about that, but I really want to go. I mean, if you can stay, please stay, because it's almost over, and I really want also to take time to address some questions if people have. So I'll finish the slides, and then I invite you to stay for 5 additional minutes if you want to put elements in the chat. So again, selling price, I think that's quite explanatory, but if we want to get back to it, we can. And then improving profitability is about spending smarter. So every expense counts. You need to review your spends every now and then, routinely, and consider if it's needed or not. And you need to look at the big spends and either try to reduce them or to find alternatives or to negotiate terms. You know, big spends, rent. Okay, you can try to negotiate with your landlord. If he doesn't want to take them down, maybe you can try and see other landlords and see what they have to offer to you. So do question every spend you are incurring, and do not overlook small expenses. If we go back to our example, the price of each bottle is little. I think it was 100 francs in my example. Okay, you might say, okay, maybe someone else will offer, 90. I won't, I won't bother. Well, 10 francs out of every bottle you're selling is actually a lot. At the end of the month, in our example, she had spent 8,000 to buy the bottles. If you're actually going to spend only 7,200, it's quite a lot of difference. It means it's 800 in your pocket. That really counts towards your profitability of your business. So it's really important. You don't take things as granted. You always look at every spend and question. The gasoline, very easy to be like, okay, well, no, it's fine. No, it's fine. Well, actually, it's not fine. Look at every transaction every month and make sure they're actually legitimate. So really question. And try to have that leading question. Will this expense help me sell more or sell better? If it doesn't, maybe you don't need to spend. Some question you might have for reflection: when was the last time you spent money on your business? Was it necessary? Another question for you: when was the last time you reviewed your expenses? If you cannot answer that question, well, you could put it in your to-do list tomorrow morning. This is the last table I wanted to put to you. Good, Franz. I wanted to put to you, Christina, Daniel, do you want to put an element in the chat box? Is it okay if I spend 3 or 4 minutes trying to explain, or do we need to cut now? Can you please let me know?
No, I think it's okay. I think it's valuable for the ladies, especially so that they can do their own. So go ahead. If anyone needs to drop off early, then please do so. The recording will be available.
Yeah.
Okay, perfect.
Thanks, Danielle. Thanks, Agnes.
Okay, thanks. Monitoring your profitability. So this is a little more difficult as a table, as a tool. I am conscious about it, yet this is the way people look at the health of your business. So this is really the official way and what you would need to aim for in the future if you don't already have it. This is called different things. It's called an income statement. It's also called a profit and loss. It's also called a P&L. It's different words, but those words are all for the same. This is what it is, and this is the way. This is the main, if anybody asks you about your business, this is what they want to see first. Okay, they don't want to see the cash position because it doesn't help them. It's not a full picture. They don't want to see your journal because it's too complicated to look. They want to see this. Why? Because you're looking at a set period. You're going to look at every year, so they can see how you did in 23, how you did in 24, how you think you're going to do in 25. It's really an indication of the health of your business. It's really like if you go to the laboratory and you get your blood tested, it's the results of the blood samples. So the first line what we call turnover is your revenues. So turnover equals revenues. So how much did you sell for in 24? How many bottles of fruit juice did our sell in the year? How much money did she make out of it? This is this is the revenues here. The cost of goods sold, I think you remember by now, but it's what I call the direct costs or the variable costs. So it's the direct costs that go in the production of the fruit juices. So again, the bottles, the fruit, the juices, the transportation, and the salary. This is all added and it's here. So obviously it's an expense. That gives, so the revenues minus those direct costs provide a number which is called the gross profit. So sales minus COGS is the gross profit. I told you before, if the gross profit is negative, so it's a loss, you need to stop right away your business. It is very dangerous. But it shouldn't be. So the gross profit here, you can calculate a margin. So you can express it in percent, which is how much this profit is when it comes to relative to the revenue. So you're making 100 of revenues, you're going to have 40 of COGS. So your gross profit will be 60. It will be 100 minus 40 equals 60. And your gross profit is going to be 60%. So out of the revenues you're making, you have a 60% gross profit, which is very good. But then out of this gross profit, you have to take all the operating expenses. So all the fixed costs and the indirect costs, your rents, the salary of the finance person, the accountant, the bank fees, and etc., 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 your telephone, blah, 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 blah. Yeah, which I actually put in 2 different places. So again, sorry, the operating expenses will be the salaries of the staff, etc., communications, etc. And then you have what we called overheads. And so it's the support element. So it's your finance person, it's your HR person if you have one, it's administration, it's bank, etc. And so that's going to be here. Depreciation, if you remember my example about the car. So I told you we do not put the cost of the car. This is not an expense. But when you bought the car, you actually did spend money. And so this expenditure is reflected here. So here you're going to put the annual part of the cost. So I told you if it's a car, the cost is divided into 5 for each year. And so here you're going to put depreciation here, you're going to put 1/5 of the cost of the car. So if the car was 1,000, you're going to put 200 here, 225, 226, and that's the expense you're going to look at that year per year. Once you have done all of that, so you have your revenues, you take out the COGS, you have your gross profit of 60. Good. Then you take out your operating expenses, maybe 30. You take out the general and administration, maybe 20. And so you have 60 minus 30 minus 20, you have 10 left. You take out the depreciation, maybe 2. And then you have your net profit. Then you have what's really left in your pocket. So for you, if you start with my example, it's going to be 10 minus 2. It's going to be 8 at the end of the year. And that's going to be your net profit. And then on that, you need to pay some taxes. Do not forget the taxes. But then this is where it is, right? So this is the money you're really generating. And you're going to be looking at that every year. You can also obviously compute the margin for the net margin, which is going to be 8 out of 100 in this example, always the same. So it's the same formula than this. It's net profit out of sales. So in our example, it would be 8%. And then this is the way you're going to track your business every year. And you're going to plan every year as well. So as you see, I put 25 forecast. So you need to be able to project what's going to happen next year, what's going to happen for the year. Now you should already have a little bit 26 in mind. So you really need to say, okay, in 25, I assume I'm going to sell more, and this is how much I assume I'm going to pay to generate. But there's also inflation, I know. So I expect some expenses to go up, and you need to really have and plan like this. Okay. So with this was my last, this was the last table I had. I know it's a bit, that table might be a bit overwhelming. We can go back on it next session, next week. I can spend an additional 10 minutes on those elements. You know, you can think about it, reflect this week, and then ask me questions, or we can, you know, put numbers down so that you understand. You can play with it this week, but if you have questions now, please put them, although we have 2 minutes left. But if you do not, play around with it this week, and then we can really spend a little more time on it next week. This is really important because it's also about funding. So if you're going to try to raise money, this is the table that you need to produce whatever happens. Nobody will look at your company if you don't have that. No one. My conclusion of the day will be about paying a special attention to personal finances and business. I know how it might be difficult with your own company to always you know, maybe make sure that, I mean, to not mix personal and business, but it's very, very important you don't do that. It's very important you separate completely the business from your personal finances, and that's why you should pay yourself a salary. Because if you pay yourself a salary, this is what you have for your personal expenses, for, you know, I don't know, the kids' school fees, for your own car, or the gas in your own car. It's really very important to not mix. Why? Because it causes confusion. You won't know if you're cash in or cash out. You won't know if your business is profitable or not. It's impossible. And you won't raise money. If you're doing that, you're mixing, you will never manage to fund. And also it's illegal. So always keep good habits, different payment and cash systems for personal and professional. And pay yourself a salary. We don't have time to play about whether it's personal or business, but I think you know. And with that, I end my presentation. I don't think we have much time for questions, but again, think about it, and next week maybe we spend an additional 10 or 15 minutes talking about it. Danielle, maybe you want to take over for the last 2 slides for.
Sure. If you want to just stop sharing on your side, I will do it on mine. Okay. All right, ladies, meaty topic, as I told you about from the beginning, and I know that it can be intimidating, it can be a little bit scary, it can be somewhat overwhelming at times, but remember that we are here with you again next week to talk about finances, so do spend some time digging into your numbers and getting the support from Agnès while she is with us. So you do have homework for this week. There are corresponding sheets in the workbook that you can look at for today's session, so please take some time to fill those in. And as with all of the training sessions, submit your workbook by 12 p.m. East Africa time next Monday, and then I will randomly select 2 of you so that you can get additional feedback and coaching in next week's session, specifically on your finances. Agnès, there is one question here. What is the best way to manage my payment terms, from Maureen?
So again, it would be you know, it would be to try and negotiate with everybody who has payment terms with you, and to really be open to the people you're interacting with about it. So I don't know if you want to be more specific, or you want to be more specific offline, but don't be ashamed, and don't be shy about asking people for different terms, especially when there's, you know, it might be difficult when there's a power, a sort of power disbalance, and yet you shouldn't be scared about saying, you know, this is not fine with me. So as much as possible, can we change the way we're operating?
Yeah.
So, yeah. But if you want to be more specific, again, we can touch base next week on that. And for Suzanne, just when asked to present financial statement, is it our income statement we present? This is the basic one. I mean, this is the alpha. You have omega and delta. So you would usually have to present a balance sheet, but this is, again, I thought it was more, you know, too complicated maybe for today. And you would have to present a cash flow statement. So, you know, this element I showed you about Monday, about January up, February up, March. So the one with like the arrows, you would have to present something like that as well. But the basic element, the base element, the one you really need to always have is the income statement. This is really number one. But yeah, we usually financial statements talk about this one, and then income statement, and then cash flow statement and balance sheet. But again, income statement is the alpha and the omega.
Good. Maureen, also for you in terms of payment terms, just in case it's more about managing who has what, make sure that you're trying to use also like an invoicing software where you can put in the details of your different suppliers and your different clients. And in that you can specify what their payment terms are, whether that's net 7, net 30, net 60, and that might help you just to keep an eye on things. If you're really more asking about like the day-to-day management of knowing who has what. All right, the other thing I want to share with you is that although the deadline for the midterm evaluation officially passed yesterday, we are giving you until the end of today to compile your feedback. So if you haven't had a chance to do so yet, please do so. It's really an opportunity for us to make sure that the remaining sessions that we have are supporting you in the best way possible, and that we can make any adjustments if we need to. So do take a few minutes to fill that in. Christina has also shared it in the WhatsApp chat. And it won't take much of your time. So next week, we will be back here again with Agnes speaking about more about finance. So access to finance, investment readiness, and partnership development. A lot of you in your coaching session that happened a couple of weeks ago were talking about how do we access funding. This is the session for that. So make sure that you are back here next week. But if you do have additional questions about today's content, just know that Agnes is going to be here with us next week as well, so that we can go through that in more detail. Okay. Oh, and Christine has also put the link into the chat for the feedback form. Okay. All right, we are over time, but thank you for being here. Thank you for being present. The links are the same. The place where the recordings are will be in the folder, and we will see you again back here next Tuesday at the same time on the same link to talk more about finance. Agnes, thank you so much for your expertise today and taking us through this important conversation. And ladies, see you again next Tuesday. Take care.
Thanks, Agnes. Great session. See you next week.
Thanks a lot.
Bye, Robert.
Bye.
Bye, everybody.